Hello and welcome everyone to the week ahead commodity report for the 25th of February to the 1st of March 2019, presented by myself, Phil Carr, at the Gold and Silver Club. And today, of course, we will be reviewing gold, crude oil, platinum, and also silver. So firstly, gold, we have seen another breakout over the last week, breaking out to 10-month highs. In fact, gold rose on Friday en route to a second week of gains as the dollar was subdued again by weak US economic data and hopes of a breakthrough in the US-China trade dispute. We also saw platinum breaking out to 3-month highs, which I'll talk you through very shortly, but that was certainly in line with our forecast from last week. And we've also continued to see oil prices breaking out to their highest level since mid-November, posting a second week of gains here, boosted also by hopes that US and China trade talks will be successful in producing a deal, although bear in mind that new record US oil supply has limited the gains over the last couple of days. And we've also seen hedge funds and money managers, they've trimmed their bullish wagers on US crude oil in the latest week as uncertainty about trade have added to worries about a slowdown in the global economy. But with that, let's move over to the charts and we'll talk you through the key levels and our forecasts for next week. First of all, we're going to go straight over to the platinum chart this week. And again, we've been identifying platinum as a buy opportunity at the $800 zone. This has worked really well for us over the last week. In fact, into the close on Friday, we are up now over 360 points on this position. We continue to ride this trade as we go into next week. And I also discussed last week where platinum typically over the month of February produces a return of 2.5 to 3%. And as of the close last week, platinum was still down 1% on the month on February, and platinum had the potential to catch up to the breakouts that we'd seen in both gold and silver, and platinum has certainly done that. So over the last week, platinum has produced a 4.3% return, and we've in fact seen a lot of the move again on a Friday, rising over 2.5% on the Friday here. So I hope some of you did capitalize on the breakout that we've seen on platinum. And I'm on the weekly chart here, and very simply last week we did break above the weekly highs as suggested. If we did see a breakout above that level, that would be a zone that we would be looking to add to positions, and we've certainly seen increased momentum to the upside. Now I'll take you out to the daily chart here as well. You'll note where we breached above these previous swing highs, which were tested around $830 per ounce. We've now breached that level, and on Friday platinum broke out to $840 per ounce. As we go into next week, I am still looking for a bit more momentum to the upside, although now we're starting to protect this position. We're trailing the stop loss higher just in case we do get any pullbacks. Bear in mind next week as well, we should get a resolution on the US and China trade talks, and also on Friday we have non-farm payrolls as well. So we're going to be starting to protect some of our trades which have really accumulated some decent profits over the month of February. And then that leads me over to gold. So gold, as we go into next week, we banked profits on gold for 200 points on a swing trade last week, just ahead of the minutes of the FOMC on Wednesday, which was certainly the right thing to do. So we saw gold break out to 10-month highs. It broke above $1,345 ahead of the minutes of the FOMC. Subsequently, we saw that put some pressure on gold, silver, with the pullback that we saw afterwards. No doubt some profit taking as well after the minutes from the FOMC. However, we have come back into a major support zone again, where you've got previous level of resistance, which is now providing support around the 1320 zone. On Friday, we have got a bullish close in the sense that we're slightly up on the day on Friday, and also gold is slightly up on the week as well. What I would look out for gold as we go into next week is to see whether we do get evidence of support between that 1320 to 1325 zone, depending on how the talks are going between the US and China, and also depending on how the US dollar is responding as we get closer to non-farm payrolls on Friday as well. We are starting to roll over and pull back a bit here with gold, and it could also be said that in terms of percentage terms, where gold typically delivers a 2% return over February, it did actually do that once gold broke out to the peak above $1,345 last week. So the question is now, has gold put the top in, or is it going to make another reattempt to break back above the swing highs? So therefore we need to go out to the weekly chart. On the weekly, it is another consecutive week of gains. Also bear in mind where last week we built up a bit of pressure at that neckline, we suggested if we broke above that level and if we broke back above 1325, we would be targeting up to the 1340 zone, which is exactly what happened. And in fact, we hit our profit target spot on. where we had entered that trade at 13.20, hit 13.40, banked 200 points. So as we go into next week, we will be watching gold very carefully. Bear in mind again that gold week to week tends to move within about a 200 to 250 point range. So let's say, for example, gold does hold around the 13.20 to 13.25 zone next week, and it springboards above that zone and makes a move and a rally towards the swing highs. Then if we looked at that from a target point of view of approximately 200 to 250 points from the lows there from last week, then we will be looking for a move up to that 13.50 zone. Overhead above that, you've got a lot of resistance at that 13.65 zone. That has provided on multiple occasions. In fact, over the last 5 years, it has not been able to really break or close above that level on 4 occasions where it's tried to break above that zone for gold. So that 1365 level will be very important. But if gold does catch a bid next week, if 1320 to 1325 proves to be the low and we do get another reattempt to break out, I would be looking at a move up to that 1350 zone. So just bear that in mind for gold. On the flip side of that, of course, as well, if we were to see dollar strength come back in, particularly on the non-farm payrolls at the end of next week, and if we were to see gold pull back a bit, what I would watch out for would be the weekly here. If it was to break below the weekly lows, if we close below that, it would suggest then we could start to see a more significant corrective move. Normally, March is not a great month for gold, so just bear that in mind. Usually, the average return for gold in March is usually negative minus 1.5%. However, this year could be different as well due to Brexit too, because there is quite a lot of uncertainty, of course, around Brexit, and that might hold gold higher over the month of March, whereas usually it will be a corrective month. If we've got a lot of fear in the market and safe haven bid for gold here as we get closer to Brexit, it might actually hold it at these highs. So that's just something to bear in mind as well. Now let's move over to silver. So silver has been consolidating over the last week, but again it has formed a higher low, a higher close, and also a higher high. You can see where it's been springboarding off that 1550 to 1560 zone. Relative to gold and platinum, silver is definitely lagging. It's still down minus 1% for the month of February. Usually over February, silver delivers a return of 3%. However, it has had a couple of attempts to break and close above the $16 level on a weekly basis. So far it's not done that, but if you look at higher time frames, particularly the monthly chart here, you can see where it is springboarding off that previous level of major resistance, which is now turning support again here at that $15.50 zone. And if we were able to break above the monthly highs here, that is where you could really start to see silver gain momentum to the upside. So again, from a range bound point of view, silver typically tends to move within about a 35 to 50 point range per week. So if you're looking at maximum upside on silver, if it was to break out next week, I would be looking for approximately the 1620 to 1630 zone if it was able to follow through to the upside. I think on pullbacks here, it's likely to get support again at that 1550 to 1560 zone. On higher time frames here, it looks like certainly it's building up a base here. If you look at the daily chart for silver here as well, you can see potentially it looks like another bull flag in formation, which we broke out from just last week, in fact, where we had another pullback and then broke out to the upside. We're getting some support as well around the 21-day moving average too, which has been tested a number of occasions over the last few days, and that continues to hold support. You've got an inside candle into the close on Friday, so I want to see whether we do get any follow through and whether silver is able to break back above $16 per ounce and potentially break above the swing highs here. Platinum is definitely leading the move right now with the precious metals, with that breakout that we've seen to the upside. Also palladium, of course, too, last week broke out to all-time highs. So overall, we've seen palladium leading. Platinum as well has had a very significant gain over the last week, over a 4% move to the upside. And I would still watch out to see if we can get a bit more follow through at the beginning of next week for the metals. But then, of course, non-farm payrolls on Friday, and as we head into March, and then we'll get a resolution on the US and China trade talks, then you want to start repositioning yourself. Now moving over to crude oil. So with oil here, over the last few days and over the last week, oil has actually now broken above the previous week's highs, which we discussed in last week's report, where we were looking at either two ways to trade oil. One would be just waiting for a pullback back towards that 55 to 54 zone in order to then look to go long at a better entry price, or very simply take a break of the weekly highs here. So the weekly highs from last week, they resided at $56.19 per barrel, and you can see we broke above that level with very little retrace last week. We've now found a previous level of resistance which is providing support, which is at the 55.73 zone, and we've had actually a fairly tight range on oil here over the last week. It's been within about a 200 point range, so it's been much shallower with respect to its range here than the previous week. I do note the hedge funds and money managers have started to to reduce their long positions over the last week. There is some uncertainty about the resolution between the US and China trade talks as we go into next week. We've also continued to see new record US oil supply as well in the markets, which have limited the gains a bit here. However, from a seasonal point of view, usually oil performs very well over March and then going into April and May as well. And I'm ultimately looking for a target here of around 59 to 60 US dollars per barrel as we continue to drive higher here. That's the expectation. I'm interested here in pullbacks as buy opportunities. So if we do get a pullback back to that 55 to 54 zone, as long as we get good support within that area, I would look to be a buyer of oil as long as there's confirmation on some of the lower time frames there. That would be the optimal in order to reposition for new long positions, in my opinion, here on crude oil as we continue to progress into next week. So I hope that helps and gives you a bit of a trading plan as we go into next week. Have a great week ahead. And of course, if you would like to join our community of successful traders at the Gold and Silver Club, as a member, you get access to our exclusive live trading rooms throughout the week. You also have access to real-time trade alerts. Those include trade management, entry, exit, take profit on every single trade that we are taking at the Gold and Silver Club. You get access to trading research and market insights. You'll have your very own membership logins to our private members academy website, where you have access to all of our trainings, our research, our market insights, as well as our strategies as well. And you have access to support and one-to-one mentoring at the Gold and Silver Club. For more information about the service, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And also make sure you subscribe to our YouTube channel. That way you're always kept updated with the latest commodity reports.